77% of wealthy people settle for poor retail banks that offer horrible returns, zero privacy, and increased risks of losing money during trade wars and recessions. So in this video, I'm going to show you exactly how our richest clients protect their money, increase privacy, and consistently beat the market by avoiding these poor banks. And the whole process is probably 10 times easier and faster than you think. So have a look at this ladder. There are 4 rungs. And the vast majority of people, they're down here on the bottom rung, retail banking. There's a big chunk of people here in the middle rungs between offshore and premier banking, and then there's the highest rung, private banking and wealth management. Now, you might be expecting me to say something like, you need to open a private bank account. It's the best way to protect your wealth. And yeah, that is an option. And it does work for some people, but it's not the best path for everyone. And it could be overkill if you don't have enough money or you don't know which bank to open with. So instead of just saying that one of these rungs is better than all the others, I'm going to give you clear, easy to follow steps so you can figure out where you should be banking on this ladder. And I'm guessing it's somewhere in the middle, though a few of you will probably be a good fit for private banking as well. So to figure this out, let's explore the 4 different levels of the banking ladder, starting with retail banking, followed by offshore bank accounts and premier bank accounts. Now, I won't spend a lot of time on retail banking. You already know what this is. You can open accounts with $1. They'll charge you fees, and whatever money you keep with them is going to be heavily exposed to consumer lending in the local economy. So trade wars, economic shocks, currency devaluations, recessions, all of these events can have a major impact on your money when it's held with retail banks. And a huge reason for this is that these banks are not designed to protect your money. They don't exist to help you make more money. And as a depositor, you are not the customer, because retail banks make the bulk of their revenue from lending money to consumers. Mortgages, car loans, lines of credit. Now, that doesn't mean that these banks aren't useful. They can be, but they're not suitable for protecting and growing your wealth. Instead, these retail banks are a good fit for transactional banking, accessing local credit, and basically as a backup account in jurisdictions where you already have financial obligations. In other words, this is where average people with a few $1,000s in savings, a mortgage, and a car loan should be banking. If that's not you, the next rung on the ladder might be worth exploring instead. And here, we're stepping into offshore banking. More specifically, we call it accessible offshore banking, or AOB for short. Here, you can typically open accounts with between $5,000 and $75,000. If you're coming in with slightly higher deposits, you'll be better suited to premier banking, which I'm going to break down for you in a moment. Now, when opening offshore, you can expect to open and manage your account 100% remotely. It's basically an accessible option for anyone who wants immediate diversification, access to international currencies or investments, or just accessing better banks. But these banks, they're not perfect. Many still engage in retail lending in their domestic markets. Only a small number of them are covered by deposit insurance, and it can be really hard to decide if the countries where these banks are located are suitable to protect your money in the first place, because most of them are not. That's why the 2 most important factors to consider when choosing one of these accessible offshore banks is the country where it's located and the bank that you decide to open with. Now, there's a lot that goes into these 2 considerations, but high level, when we help clients open with these sorts of banks, we focus on countries with a stable political environment, a strong bank regulator, and good correspondent banking relationships. And when it comes to banks, we're looking for options with limited consumer lending, a strong balance sheet, and a history of good management. Now, there are obviously more factors than this to consider, but these are important ones when it comes to opening an account that will actually protect your money. And again, this is for people looking to deposit between $5,000 and $75,000. After you cross that $75,000 threshold, you're jumping onto the next rung of the banking ladder, which is premier banking. Now, premier banking goes by different names depending on where you want to open an account. It can be called premier banking, privilege banking, priority banking, and a few other names mixed in there too. But in almost all cases, these names mean exactly the same thing, which is opening an international or offshore bank account with a global bank that offers some level of prioritized support. Now, this is not to be confused with private banking, which is a very different level of service and caters to specific clients. I'll dig into private banking next. But first, let's talk about who can open a premier bank account, because it's not everyone. You need to qualify. And in the most basic sense, that means 3 things: a qualifying citizenship, a qualifying tax residency, and a qualifying deposit. Now, citizenship is pretty easy. You can't be from a sanctioned country, though in certain places like Singapore, there are restrictions on Western countries too, like the US, Canada, EU, UK, Australia, etc. And of course, different banks have specific countries that they will and won't work with. So bank selection is pretty important. When it comes to tax residency, it's a bit more nuanced because premier banks ultimately want to sell you products and services. So they're looking for people who live in countries they're allowed to sell to. Again, this is going to vary by country and bank, so it's important to know which countries and banks best align with you. As for the deposit, this is the easiest qualification to understand because you either have enough money or you don't. In most cases, if you want to open a premier bank account, you're going to need to deposit $100,000 on the low end and up to $300,000 on the high end. But there are options where you can enter premier banking with only $75,000 US. At these deposit levels, you should be able to access solid banks in places like the Channel Islands, Singapore, Hong Kong, the United States, the UAE in certain instances, and you might be able to access a few non-private options in Switzerland as well. Basically, if you have the right citizenship, residency, and you can make a qualifying deposit, you can access good banks and good banking hubs. And these are banks that will help you diversify, protect your money from economic shocks, get access to international currencies and investments, and even increase your privacy. But what if you have more than $300,000 that you're trying to protect? Well, now you're jumping up to the next rung on the ladder, private banking. But $300,000 isn't really a private banking deposit. It's just a starting point. And that means if you're coming in with this sort of deposit, it's going to have to grow within the first year, usually to between $500,000 and $1 million in order to qualify for private banking. Now, if you're an American, you can open accounts with $1 million. But as you probably already know, there aren't many international private banks that will take you. So it's better if you can come in with $2 million to $5 million to get going. Because at that level, you'll have banks that are keen to onboard you. Now, like all the rungs on the banking ladder, qualifying to open an account isn't just about money, though it's an important consideration. But in addition to money, you need to know where you can open in terms of citizenship, residency, source of income, source of wealth, expected transaction activities, ties to different countries, and many other variables. The point is, there are many different considerations that go into deciding where you should or shouldn't open, both in terms of countries and banks. So if you want our team to review all of these variables for you and then suggest specific countries that you can open accounts in for free, you can click the link in the pinned description below and complete a free assessment right now, or just go to globalbanks.com/apply. Of course, how much you can deposit is still going to be a big hurdle. And while I can't help you with your deposit amount, I can help you figure out which countries could be a good fit for your profile. And sticking with private banking here, we typically break them down based on geography and deposit amount. So if you're looking for European private banking, you should expect to deposit between $500,000 and $1 million in places like Switzerland, Austria, Liechtenstein, Monaco, and Jersey. Though this can creep up to $2 million to $5 million in places like Luxembourg and even Switzerland, depending on your bank and profile. Now, if you're leaning more towards Asian private banking, you need to be coming in with between $1 million and $5 million as a minimum, depending on the country and bank that you want to go with. And here you'll have options like Singapore, Hong Kong, South Korea, and I'll also stick the UAE in here because it's typically aligned geographically with many of the Asian banks. Now, over in the Caribbean, you should expect a deposit between $500,000 and $1 million. And options you might want to consider are in places like the Cayman Islands, the Bahamas, Barbados, Bermuda. But frankly, most of the people seeking diversification, strong banks, stable jurisdictions, and optionality in terms of currencies and investments typically look towards Asia and Europe instead. Because when you're coming in with the type of deposits that we're discussing in this video, most people are going to have solid options in the countries that I just mentioned, and they'll be able to access diversification, stable banks, and even more privacy. Which brings us to the biggest hurdle that you'll need to overcome, which is choosing the right country and bank to open with. Now, if you're like most people that come to us for help, you probably already have an idea of where you want to bank. And two of the countries that you're probably already considering are Singapore or Switzerland. These are both great options, but in our opinion, they serve two very different purposes, which means they should be used by two very different types of people. And I'm going to tell you exactly who should and shouldn't bank in Singapore and Switzerland when trying to achieve diversification in this video right here. So give that a click and I'll see you over there right now.